Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and figure out what is happening today. Nice close to the week, of course, so we'll go over a lot of different things. And honestly, I have a bit of a change of perspective after today's price action. I'll go over that as well. And as usual, if you enjoyed the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is below, $3 a month, where I share my intraday thoughts on Tesla as it's moving throughout the day. So with that being said, let's dive into it. So let me go ahead and bring this actually over here just in case so I have it. But Tesla closing the day up, actually a nice up, just over 2%, closing at about $214 per share, which unfortunately, compared to the market, is an underperformance, with QQQ being up about 2.3%. So we're not even up the same amount. We're up less than QQQ, which is an underperformance because usually Tesla, if QQQ is up, let's say 2%, Tesla should be up 3.5%, honestly, roughly, right? Give or take, assuming it's just strictly following the market and nothing else. So a little bit of a weakness here, but nonetheless, still a good day. So let's talk about it. So we talked about how, I personally foresee happening, like my ideal scenario. Hopefully some of you remember me talking about that. What was it, yesterday or the day before? I don't remember. But we talked about like my ideal scenario, how, ultimately we get a bounce from here, and then we essentially set up a scenario on the RSI where, we get a bounce, we come up somewhere to pretty much this level, actually reject, and then make our way back down and start making a bullish divergence and whatnot, and then potentially, set up that double bottom play and whatever, right? We talked about all that. It's in the video if you want to double check it. And so far we're playing that out. However, there are a few things that change from my perspective here, which it's more bullish short term, but it still ends up being bearish later, if that makes sense. So let me talk about it. So my initial perspective was the fact that we move up here and then we move all the way like pretty much right around here, and then we drop down, right? We drop down to about $200 per share roughly, make the double bottom, and then from there I think we base, and then we ultimately make our way back up for the rest of November. That is still technically a possibility. I need to see Monday, honestly, because I want to see how this holds over here, which I'll talk about very soon. But that was my initial perspective. And of course, if we break 200 and we break down below that, and especially if we break the lows over here, like, like 194-ish, right? 195, then I think we come down to retest the bottom of this overall bear flag channel, which will bring us somewhere to, 180s, give or take, a few dollars, right? Something like that. That's kind of my initial perspective. And it's still a possibility. It's still absolutely a possibility. However, like I said, I have had a little bit of, changes, right? So first and foremost, I just realized, well, after today's price action, really, but after today's price action, you can now finally get an idea that, we might be in this somewhat of a bear flag here on the 65-minute chart, right? Ever since this massive fall we had all the way over here, pretty much right around earnings. I believe this was the earnings fall. Yeah, it was, right? Right around earnings, we had that fall, right? So this is a large fall, right? This is the pole essentially from just, roughly around here. Boom, nice little flag right here. And then of course, make our way down even further potentially. But as of right now, and after today's price action, you can see that we have developed a little bit of a base here, which ends up creating this flag, right? So that's number one. But the main thing that changed my mind, I guess, slightly is the fact that, so there's a 21 EMA, which is this yellow line right here on the 65-minute chart. And you can see it acts, pretty decent when it comes to determining short-term momentum, I guess, right? So, ever since we kind of broke below it over here, you can see we kind of, hovered around it and then came back up, retested it, had a bit of a bull trap here, but ultimately we danced around it and then continued down even further, came back up, also got rejected, came down further, went back up, got rejected again, came down further, kind of went up here, danced around it for a while, and then we finally had a nice little candle break, and then we had a beautiful rally, then consolidation as we continued dancing around it, finally broke below it, and we continued further down, and now we're kind of dancing around it once again. And this is the part that's making me not second guess things, but have an alternate perspective, which is essentially this bear flag, right? Because we broke above it, we closed the candle above it, and so far the two 65-minute candles are kind of bouncing off of it. You can see, right? We came back down to it, and both times we have so far bounced off of it, which is good to see, at least for the very short term for the bulls, right? So the way I look at it is, if this actually holds, especially ideally, I guess, Monday, that's why I want to see Monday. I want to see this as a false flag, if you will. If it's not, and we do hold, that to me tells me that the short term, like very short term, like literally, I don't know, max 2 weeks, I would say, is bullish, right? Is bullish. And what that to me tells me is the fact that ultimately for the majority of November, from, starting next week, right? There's only about just under 3 weeks left of November, because technically the Friday is the 1st of December. So almost 3 weeks of November, right? And I wouldn't be surprised if a decent portion of that ends up being bullish if we hold. And ultimately that leads us to the top of this little bear flag that we are in. I'm not entirely convinced as to where the top of this top of the bear flag is, you can easily make an argument that it's something like this, right? This can be an argument. You can also make the argument the fact that it's something along the lines of this, because we never truly actually close any convincing candles above it, right? But regardless, if this is the scenario that plays out and we do hold on Monday above this 21 EMA, then I can see us potentially having a short-term rally again for the next, 1-2 weeks or something like that up to the top of the bear flag, which in turn will actually put us somewhere around the very high 200s to the low 230s. 220s, high 220s, low 230s, roughly is where that will put us, right? So for instance, let's say that happens somewhere around, I don't know, actually, even if you drag this out a bit, even like this, right? For instance, right, you can make an argument like this, right? And if it takes a lot longer, for instance, or maybe it doesn't happen for long, maybe it only happens for a little bit, and November plays out in a very conspicuous way. And let's say this happens by, I don't know, November 14th, which really isn't that far. That's literally like early next week, just as an example. And we get this massive rally up to 230, which is not impossible, but whenever essentially it happens, we'll just say 230 for now. The point is, we go to the top of this bear flag. That, of course, is a bear flag, right? Like I said, bear flags are usually, not always, but usually have 5 touch points. So this will be touch point 1 right here. This is touch point 2, touch point 3, touch point 4, and then of course we have touch point 5 that breaks down something like this, right? And then maybe go even lower. But that's kind of how bear flags usually play out. So that's something I would not be surprised to see whatsoever, assuming of course we continue holding above that 21 EMA on Monday. So that's kind of my alternate perspective. And this also kind of makes sense with the sense that if, let's say, we do play this out, and let's say we go up here, and then let's say maybe we even consolidate, and maybe we take longer, and the longer we take, that technically the higher that the top part of the bear flag will be. So we'll go a little bit higher, right? So for instance, let's say we just go sideways, and then we don't hit it until much later, and it takes a lot longer. Or let's say ultimately what happens is we come back down to retest the bottom part of the bear flag again, kind of like what we did over here. We kind of like came up to touch it twice. We went here, came down a bit, came up, touched it again. So like an alternate example is something like this, where we touch point 1, touch point 2 and a half, you can say, right? 3, and then we come up to, like, let's say here, maybe 220, come back down, we touch it one more time, and then we go up. And then we go down, right? Just as an example, like this is something that can also happen, right? And this will take obviously a lot longer. And this is happening towards the end of November, like 22nd, let's say, which is almost $240. The point is that this is also an option, right? Something along the lines of this. If this happens, then what I personally see is December being a bearish month, right? Maybe the last part of November, maybe a sell the news type Cybertruck event leading into December. December, people tend to expect center rallies, but often enough, Decembers are mediocre months, honestly. And the reason for that is quite simple. There's a lot of tax loss harvesting happening towards the end of the year, usually somewhere in late November, somewhere in December, because people are usually selling things for a loss to offset any gains, right? That's essentially what tax loss harvesting is. And that happens very often. And it happened in Tesla last time as well. I remember it dropped pretty significantly because of it. But that's something I wouldn't be surprised to see. And this kind of fits that narrative. This sort of kind of makes sense. It really just, it makes sense. But again, this is all assuming that we continue holding above this 21 EMA and we don't break below it. If we break below it, then this kind of plan falls apart, and then that short-term pain, and maybe we're making our way back down to 200, potentially lower if we break 200, happens sooner than later, and we kind of rip that band-aid off sooner. So it really depends on which scenario plays out, in my opinion, based on this 21 EMA. But that's kind of the main thing I'm looking at right now on the short term. Looking on the daily though, right? On the daily, a pretty decent looking bullish reversal candle, right? It's not a hammer candle because the candle itself is longer than the wick below it. So it's not a true hammer candle. Like for instance, this one was all the way back here, but nonetheless, it's not a bad looking candle, right? It's a pretty okay looking candle, but we are approaching, like I said, some resistance, right? This area over here that we had issues, or that we consolidated in, we broke down below it, and now we're kind of coming back up potentially to retest that, right? You can make an argument the fact that we're coming up to retest that, and that we were in a little bit of a trend that looked something like this, and maybe we'll come back up to retest that. That's kind of what I did with this little scenario. So this bounce comes up to retest this, we've successfully retest that, make our way down, kind of like what I did here, right? Go up, come back down, and then make our way back up once again. This will be trap city. Like this will be like a trap here, then a bear trap here, then bull trap, bear trap, bull trap, come down, bear trap, right? There'll be a lot of traps, but this is something that I can foresee happening. So that's the way I'm looking at it there, right? But nonetheless, pretty decent looking on the daily with the candle. But keep in mind, we do have some resistances above us. Like I said, just this retest potential coming up not too far ahead of us, which is I think around 220, low 220s. We also have the 21 EMA, which is sitting at 221 right now. We have the 200-day moving average, which is sitting at pretty much 221 as well. So wouldn't be surprising if 221 is the next target early next week. Then I think from there we got a rejection. We play out kind of what I showed over here. This will be the 221 right here, retest right here, which is where the 21 EMA and the 200-day moving average are on the daily. Come back down to the bottom of the bear flag, kind of touch the point once again. Ideally hold, rally back up to maybe 240 for the rest of November or the majority of November, get a bit of a bull trap here, make our way down, etc. Again, it doesn't mean it has to play out like this. This is just a scenario, but this is kind of what I'm seeing. Those are the two pathways I'm seeing. Whether we do this or whether we fail below the 21 EMA short term and we just collapse right away. It's one of those. I don't know which one yet. It's just a matter of, do we hold or not on Monday for this 21 EMA? But that's the main thing I'm looking at right now. The weekly, not looking too shabby, right? We did, of course, hold above the 200-day moving average, which is a good sign for the bulls, which is why I wouldn't be surprised if that current scenario I just told you about with the bear flag plays out, because technically bear flags, technically short-term are bullish, because as you're in the bear flag, you're in an ascending channel. So as you're forming the bear flag, you're technically bullish because you're rising upwards, you're moving up to create the bear flag. It's just it ultimately ends in a bearish pattern and it ends up falling sometimes aggressively from the channel. So take that for what it's worth, but that's kind of the main thing I'm looking at. And let me take a quick look at options flow. Let me see if that, it's actually not here anymore. Interesting. There was an options flow that I showed my members that it's gone. I'm not sure. I hope the app isn't like glitching, but there was a large one here. It was like a 2 million prints. I think it was like June of 2025 or something like that, or January or June of 2025. It was like a 175 put or something like that. It's gone. I don't know why it's gone, but it's just gone. It was like right over here somewhere, but yeah, it's gone. So I'm not sure why, but it's not there anymore. But nonetheless, that's kind of what I am seeing right now. A little bit of bearish flow over here. You can see, so, we have almost a 1 million prints right here, 195 puts, December of 15th. So we'll see. Definitely looking a little bit more bearish than bullish short term, but that's the main things I'm looking at right now, and those are the main things I'm seeing. The weekly MACD is still looking pretty suspicious, not looking very healthy, still looking a little bit concerning. But the daily is looking okay, pretty good, not too shabby, other than the fact that we have the 21 EMA and the 200-day moving average resistances above us, and the 65-minute chart we all just discussed what the possibilities are as well. So with that being said, thank you so much for watching. If you enjoyed, don't forget to hit that like button, and as usual, I'll see you on Monday. Peace.